one of my favorite times of the year.
I like the month of July.
I love the month of July, and I love July 4th. It's always been one of my favorite holidays. And today is Thursday, July 1st, so we are on the cusp of the 4th, and I hope everybody has a wonderful 4th. If you're traveling, please be safe and wear sunscreen because it's hot out there.
Wear sunscreen, and you gave a really good, I'll say warning.
A PSA.
A PSA
Yeah.
For fireworks. I know we all enjoy fireworks, but many of us have grandkids and little ones around, so please be safe and be mindful of. They're great and they're fun, but they can create.
They can remove a digit or two.
So be careful. Be careful of fireworks. But again, happy 4th of July.
We've talked a lot about transitory inflation versus real inflation, and we're starting to see signs that the Fed is not completely off the deep end, that there is a lot of transitory inflation out there. Just in the month of May, we saw the lumber prices drop 43%. So that tells me that the supply chain is getting healthy again, and that mills are operating, and that truckers are getting the product to the mills. Everything is starting to work again.
I think one of the most interesting things that you've said, you say a lot of interesting things, but I was fascinated in what you said this morning on our show about commodities. And we ask each other the question, when you think in terms of commodities, and that would be the metals, and that would be the beef prices and grain prices and all the stuff that comes into the bucket of commodities, when do you usually buy those? And the answer typically is if you think in an inflationary time or a time when the market is not going to be a pure growth market. And we look at commodity or political reasons, and we've looked at two things. We've looked at the commodity average prices. You just mentioned lumber, and that's a commodity. We've mentioned grain. We talked about grain prices. Oil is the exception. It's a commodity that has another reason driven. But overall, commodity prices are coming down.
Yes, in most cases. So the sticker shock that we all received a month ago when we went to the grocery store, you should start to see that those prices come down slightly because we're seeing milk prices come down. We're seeing some soy prices coming down, soybean prices coming down. It's not across the board yet because that tells me that not all the supply chains have healed, but it's a really good sign because we saw a lot more reductions in prices as we follow these indexes than we saw increases.
More discussions are continuing about oil and oil as a sector of consideration. We're looking at that and in some cases adding that to portfolios. So we're watching that and looking for opportunities there.
But we do feel that the oil prices for the remainder of the year are going to continue to rise.
WTI this morning was at $74. There was a discussion I heard early this morning, and you've read it, that there's speculation it could be up to $100 a barrel. And there's now concern. A conversation this morning that I listened to was circled around what will OPEC do over the next couple of days in meetings. Well, folks, we hadn't had that discussion in 5 years like we said last year. But now, unfortunately, because of decisions that are being made for United States not to be energy independent, we're now back dependent. So oil is an opportunity possibly for consideration.
Sadly, but that's true. Yeah,
True.
That's absolutely correct. So I think what we're seeing is a gentle healing. The 30-year Treasury is down into the 1.47, and it was as high as 1.7 just a month ago. So, the bond market typically leads us down the road that where we're headed, and they certainly don't seem to be worried about rising interest rates or inflation currently.
And Tina is still live and well. We looked at another chart this week that showed us the sectors, equity sectors, all kinds of equity sectors, large, medium, small, value, growth, international, and then the bond sectors. And it compared it to a inflationary period and what they're doing thus far this year and historically done. every one of the equity sectors showed an upside opportunity. None of the fixed income sectors in a rising interest rate and rising inflationary market showed an upside opportunity. So Tina is here, and just like in the meeting,
There is no alternative.
That's
just
right.
by the way, BTW.
Yeah, it's not a new employee we have named Tina. So Tina, there's no new alternative, or there's no other alternatives except the stock market is here. Just like the meeting we had yesterday with a client, let's take advantage of the runway that we think is at least another 12 months. There are going to be bumps, there are going to be air pockets, but the overall projection we believe is going to be up. So let's take advantage of it.
And enjoy the 4th of July.
Please do.
Remember what it's about also. And always remember, it is your money.
And your money matters. Happy 4th of July.